Knowledge is the small picture. Wisdom is the large one. In keeping with that quote starting the show today, I want to show you and I'll explain to the folks who are joining us on the podcast, those who are watching the YouTube video, I want you to look at the charts you see displayed before you. If we go back to 2020 when we had the COVID crash, you can see 4 solid weeks of red, ever-lengthening down candles, and then things bottomed out in the 5th week where the candle went solid green. That's a slowdown in the down movement, bottomed, and then turned around and but for a few short pullbacks, continued to move up until recently. If we zoom in there, we can see where we hit the high, and that was at the end of 2021, just a few short months ago. And then this latest slide took off. Now, we're going to see something a little different when we look at the NASDAQ 100. We've not sunk that low yet as far as the bleed-off effect goes. But we are seeing massive, significant move downs. Look how the price percent oscillator is just trashing. Derivative oscillator very red. And this is part of the difference between knowledge and wisdom. Sitting back, we ask you to do this on Wednesdays in particular, stepping back, looking at the overall market, getting a feel where that big wave is. Well, you can see it. Big down day in the market today and several different things. Bonds way down, NASDAQ 100 down. Again, just the overall mood. Gold down, everything down. Now, Bitcoin, depending on where you look at Bitcoin, New York Stock Exchange Bitcoin Index shows down. But when we look at our futures, we look at Grayscale Bitcoin, it was down, but the futures markets were up about 1% or so, but still lots of downward pressure. But we look at where the S&P is. Lots and lots of downward pressure, weeks of pressing down moves. Now check out the NASDAQ 100. We go back to the COVID crash, again, very similar to the S&P, popped all the way down to that 200 period exponential moving average line and bounced off of it. Look at where we are now. We had 5 weeks of down movement. We've had weeks and weeks of strong down movement on the NASDAQ 100, the Qs, and more so than we saw with the COVID crash. Now, the 200 period moving average line still a ways away. Price percent oscillator heading down. Derivative oscillator started gaining some more downward momentum, still quite red. Look at bonds, where bonds are. Now, again, you go back and you look at where things were in 2020 as bonds also dealt with the COVID issue and then sort of recovered some and then crashed for a while, recovered some, and now they're crashing again. And, reaching those, lows all the way back to 2019. So again, we are seeing a lot of just downward pressure, downward momentum, whether it's bonds or stocks. Now, gold, even though it's down for the day, is a bright point. If I zoom out a little bit, you can see where gold hit its high, $194.45 on the week ending the 7th of August. So far, high $193. Not quite as high last week, but again, trying to push up there. Price percent oscillator heading up, derivative oscillator, gaining upward momentum. So a lot of push in gold as maybe a safe haven's what we're looking to there. But again, with all of this massive down push with some decoupling, people, looking to try to cover margin calls, anything else, you can see that systemically affect everything as things deteriorate. But gold, the oldest store of value there. Now we look at what Bitcoin is up to. We can see where Bitcoin hit a high back there in 2021, rolled over, pushing back up again in late 2021 and then rolling over. And what's it been doing now for many weeks? Just sliding sideways. Is it trying to form a base to start moving back up again? Could be. We're waiting, we're watching, we're seeing, particularly looking at how helpful the weekly charts have been for Bitcoin in the past. I am definitely looking and waiting for a weekly vertical crossover to occur. But I want you to occasionally, and that occasion should be Wednesday nights, once a week or so, could be every couple of weeks, but sit back, look for the long view, strategically. Get off the tactical, sit back, look at strategically where everything is. And what you see now is a market that has lots and lots and lots of negative pressure on it, particularly stocks and bonds. Now let's jump into these charts and see where they are for the day. S&P down 0.73%, starting the week off negatively. Haven't hit the low that we reached on the week ending the 25th of February. Price percent oscillator heading down, derivative oscillator negative and quite negative. We go to the 2-day, again, moving down, red down candle. It's got a little bit of movement on top, mostly down that price percent oscillator, just falling off the deep end. Derivative oscillator gaining downward momentum. We look at the half-day chart. We can see where we had that crossover pulling away and again accelerating down at the end of the day. Haven't hit that low yet that we see going back many days, but again, still lots of downward pressure. Now, with the craziness going on in the world, good news coming out of anywhere, the Fed, coming out of Washington, coming out of Eastern Europe, any of those kind of things can cause a market flux, a day or two of pop-up. But unless that war ends and gas starts coming from somewhere, expect there to continue to be this downward push. Remember, when that weekly chart is heading down, it is the big kahuna. It's the big wave. The tide is going out of the harbor. What happens to all the boats, the little and the big? They all go down. So keep your eye on that. Remember that in the back of your mind. Now, the NASDAQ 100, again, you can see just vicious down moves. And we see things again starting the week off, big red down candle, price percent oscillator heading down at about the same angle it's been going down for what? Going into the fourth week. Derivative oscillator still losing a little bit of downward momentum, still quite negative. Price percent oscillator heading down. And as far as the most recent lows go, okay, we go back to the two-day candle ending the 24th of February. That low was 318.26. 317.45, so even lower. Derivative oscillator gaining downward momentum half day. And again, you can just see where things just trundling down, pulling away from the red signal line, derivative oscillator going negative. So again, lots of downward momentum. Not saying with any bull or bear market. In a bull market, things go up, then they level off, might go down a little while, but they're inexorably moving up. With a bear market, inexorably moving down. There may be green candles that'll form for a week. There may be pull-ups, but then everything continues. So keep that in mind. Watch for that. See how that plays out in your strategic long-term view. Look at what's going on with bonds starting the week off with a smashing down candle, 2.33% down. Price percent oscillator spiking over, going down. Derivative oscillator gaining downward momentum. And of course, what happened? We had that 2-day recross, got very, very weak with that 2-day candle heading down, representing Wednesday the 9th and Thursday the 10th, and then just smashing down. Starting that would be Friday and Monday on this 2-day candle, and we will revert. We told you to be watching for that to occur. If you had a 2-day recross, and of course, we have seen that happen. 2-day recross in effect. Now, let's go to the half day, And again, down in the morning, further down in the afternoon, lots and lots of downward pressure on bonds, particularly with the resuming of the 2-day, heading down with that recross. What about gold? Gold down some for the day. Of course, it peaked. Peak gold at $193.30 a share on GLD. Losing that as we start the week, dropping off considerably. Price percent oscillator still heading up. Derivative oscillator gaining a little bit of upward momentum, but a down day for gold to start the week. 2-day, you can see where that weakening was already starting. It started with the Wednesday, Thursday, then the Friday, Monday, going solid red from red open box slowdown. Price percent oscillator heading down, still positive though. Derivative oscillator going into its 6th day of losing momentum. Half day, it of course crossed over, going down in the afternoon on Thursday and has been moving down over the last couple of days. Price percent oscillator heading down, derivative oscillator gaining downward momentum. So we'll see where gold sort of settles out there. Overall, though, gold still has a lot of push from that weekly, 2-day week, but again, hasn't crossed over. So we'll watch gold, see if it doesn't give us an entry point potentially for jumping back in. We'll see. Now, what about Bitcoin? Like we said, the future's up for the day. XBTF up 1.35%. We follow where these charts are. We see, of course, a big sideways slide. Price percent oscillator about flat. Derivative oscillator negative, but losing downward momentum. 2-day also flat, but positive. And again, what are we really waiting for here? We're waiting to see if the 2-day is going to cross over going down, just taking us out of Bitcoin, so we expect more down movement, or if the 2-day is going to stay positive and lead us to a crossover going up. Are we making a base here? Don't know yet. We'll wait, we'll watch, and we will see when and if that weekly vertical crossover occurs in the near future. We'll know. We see on where Bitcoin over the last few days, it just sort of bottoming out there, somewhere around that 38.80 mark, 38,800 and something bucks or so. So we'll keep an eye on things and see where it leads us. That half-day chart is, of course, still negative now. The 2-day is positive, and the weekly is negative. So we'll see where Bitcoin goes. Don't have a clue yet. We just don't. So we're waiting, watching, seeing, keeping our powder dry. That's where we are, folks. As we start the week, remember, always keep a distant view as well as a close one, so you can actually determine what's happening in those multiple time frames, because they all come together to let you know what's really going on. That's where we are, folks, as we end the day. Thanks so much for being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters. Hey, watch in the driver's seat. Put a new one out today. Newest video. Check it out. God bless.